Welcome to AGORACOM, the Small Cap Epicenter, and AGORACOM TV, a daily, fast-paced, edgy show bringing the best press release out of the small cap space every morning at the open, so you can hopefully profit from them. Maybe find your next great small cap investments. Thursday, April the 12th. I got two press releases for you, as always, quality over quantity. I'm going to start you off first with Focus Metals, traded on the TSX Venture Exchange under the stock symbol FMS, for our friends in the U.S. on the QX under FCSMF, and for our friends in Germany, FKC. Now, before we go to the news, got to disclose, Focus Metals is a sponsor of the AGORACOM site and the AGORACOM Graphite site. But as always, we don't talk about AGORACOM sponsored news unless it stands on its own 2 feet, and I think this does. The company is announcing an update on their Nyse graphite property. Specifically, they're saying that 46.1% large flake validates the company's high-grade, high-concentration, world-leading graphite deposits. The company's words, not mine. Metallurgical testing was done by SGS Metallurgical Services, a very reputable group. In addition, reported the deposit had 46.1% large flake. They also reported 39% medium flake, with an overall global recovery of about 86%. Now, what does that all mean? Put it in perspective. Focus Metals president Gary Economo, who's one of the best, who's one of the best commentators of all the small cap graphite CEOs I see out there, said that in addition to the 46.1% large flake, the balance of the available graphite flake can be used for the production of anodes for the high growth lithium battery manufacturing center. He also went on to say, quote, Nyse 16% grade and a large flake concentration of 46% validate our deposit's commercial primacy in an emerging and highly competitive sector, especially when the balance of our resource can be largely dedicated to a battery-grade applications. Hopefully that puts it into perspective for you. For those of you who don't know about the company describes themselves as the owner of the highest grade technology graphite resource in the world. The goal is to assume a dominant industry leadership position by becoming the lowest cost producer of technology grade graphite. So those are very lofty goals. But on the other hand, Focus Metals has already done some great things, especially when you take a look at their stock chart over the last year. Yesterday they closed at $1.18. Now their 52-week high is $1.33. They're not that far off, and that's pretty great performance, relatively speaking, when you consider what's gone on in the small cap resource space in general, and their 52-week lows at 54 cents. So you've got a lot of very happy shareholders there. As always, do your own due diligence, but Gary Economo, a fellow Greek, and more importantly, he knows his graphite, so he's definitely a guy you want to know. Goldgroup Mining, TSX Big Board, GGA, they announced the completion of a preliminary economic assessment. This under 100% owned Caballo Blanco. The company says it indicates, quote, robust project economics, 66% pre-tax internal rate of return, and $284 million pre-tax net present value. This gold project is located in the state of Veracruz in Mexico. They're assuming here an approximate 7.5-year mine life and produce 687 ounces of gold, 1.3 million ounces of silver, based on the current mineable resource, which means obviously they're looking to expand that. Now, they got a lot of highlights in there, a lot of details. Anytime you get a preliminary economic assessment, there are a lot of facts and figures. You got to go look at those. Here are a couple things that I picked out that were interesting. They're expecting annual production of about 95,000 ounces, not that far off Timmins Gold that's expecting 100,000 ounces. So they're going to do that 95,000 ounces of gold over years 2 to 7. Total cash operating cost, $784 per ounce of gold. Now, that actually is pretty high. That's getting up there. But given the fact that you've got gold trading at between $1,650 and $1,700 right now, it makes it economical. And I also like this. The initial capital costs are estimated about $85 million. That's not that high. It's not outrageous, and definitely manageable for a company if they're going to need to go out there and raise the money or do some kind of debt program. Now, they closed yesterday at 81 cents. Their 52-week low is 80 cents, so they're pretty much there. They are down another 4 or 5 cents this morning. Their 52-week high is $1.75. I, in fact, have traded Goldgroup in the past. I like the company. I think it's got great fundamentals. This PEA says a lot, but we are going through a bit of a turbulent time here in the small cap, so you've got to do your own due diligence, both on the company and on the stock charts on the technical side before you decide what you're going to do with it. That's a wrap. As always, quality over quantity. Two great press releases for you. If you look for more great resource news and you watch this on Globe Investor, then I'd look to below me or to the left of me to see the companies we've covered over the past few days. Otherwise, if you're not already there, get to the front page of AGORACOM. Watch the show, take a look at the best headlines to my right, and get into our marketplace to discover your next great small cap stock. That's a wrap. Have a fantastic day. See you tomorrow.